Okay, ex-traders, let's review two new plays for this week of November. This one here, we're going to go ahead and start by basically drawing our levels. And we're going to go ahead and look for some swings, some pretty clear swings right here. And let me see. So basically we're looking for swing highs and swing lows, which should be familiar. You should be familiar by now. It's basically just like the significant turning points. There is a formal definition for it. I look it through in my intro to trading video, but basically it's where you can obviously see that it flipped. And these, so this is more than a swing. It's just like obviously a multi-touch level right there. This is a swing right there. This is swing low. And so we do swings and multiple touches, okay? And we try not to go too overboard. We're on the daily, so there should be a few of these levels here, because then once you get into the hourly, then you might end up with too many levels, and it's basically an unreadable chart. So after we add them, we're going to go ahead and adjust them, and even when we get down to the 1 hour, we can adjust them even more. So let me see, if you want to find the ones that are closest to the current price. If you don't want to go too far from the current price, because then they're just not relevant for the next week maybe, or they're probably going to be relevant over the next month or so. So find some more over here. You probably want to draw at least 3 or 4 above the current price and 3 or 4 below on the daily. Okay, and I always use the 1 pixel line for anything that's from the daily time frame and above. And we go down to the 1 hour, like right now, we're going to switch over to the dashed lines. So this, okay, you can see some of those levels are definitely being respected. So we can go ahead and start adding. This is the highest resistance above current price. So that's our entry. If broken, we're going to take it to the next resistance above, and we will obviously adjust the price to the downside as a stop loss as well. So the bearish or downside play, this is the next support below, so that's going to be our entry. So we click there, and basically what we want to do is adjust the price target to be the next support down or the next resistance up when you're going long. And if you don't have enough levels, then you definitely should add some. And that one looks like one right there. Let me see here if I can find any others. Yep, that definitely looks like one right there. Okay. Yep, that's pretty clean right there. So let me go ahead and add this one up here. Okay, so we can have more levels to the upside for targets. Right there. Okay, so you want to do the entry as the first resistance to be broken to the upside or to the downside, and the price target the next levels above or the next levels below. Okay, so let me see here. Yeah, yep, that's we can use that one. So let me adjust this here, and there we go. Okay, now the other ticker, which we're going to be looking at, and you always want to zoom out to at least 12 months, so that looks like enough, and start drawing support and resistance. Just look for swings or multiple touch lines. So here we go. Some of the easy swings. Remember, go for the clear-cut swings, you know, the clear-cut levels, the ones that are undisputable, and nobody's going to argue that this is a swing or that this is a multiple touch level, you know. so keep adding these. This is a clear one right there. Let's add that. Okay. And that one right there for sure. And again, try to keep the ones close to the current price. We don't want to go too far above or below because then they just won't be relevant to our time frame. All right. See, this one is a clear swing right there. And you can go in and verify these later when you zoom into the 1 hour to make sure that they're actually swings. And if you want to be real technical about it, you can obviously go ahead and check to make sure that they, comply with the strict definition. All right, and I'm going to add the fibs, which I just remembered that I did not use for the first one. We said we go back 12 months. Then step number 2, we add levels at the swings and at the multiple touches. And step number 3, we draw the fib retracement over the 12 months, or in this case, I see that there's a lower low, quite significant. It's past the 12 months, so I'm going to go ahead and use that one. Okay, we draw the fibs just as a way to corroborate some of the hand-drawn levels that we're going to be throwing onto the chart. Okay, and then we can obviously, we have to come back and adjust these because you can see they're kind of, not perfectly lined up. Okay, so let me adjust some of these here. And there we go. Okay. So, see if I can find a few more. And like we mentioned earlier, at least 4 or 5 above the current price and 4 or 5 below, just to make sure that we have enough targets to the upside and to the downside. All right. Okay, let's see up here. We need to adjust some of these. Yes, I know. This one. All right. And yep, these levels look pretty good. Some of them need adjusting, but let me see here. That's a clear one right there. Okay, and this one. All right, so I think we have quite a few levels in here. Yeah. Remember, you don't want to go overboard on this. Okay, so yep, let me check the top of the fib just to make sure that, oh, this one right there, okay, maybe. Yeah, top of the fib is pretty good. All right, okay, so fibs and levels, some of those line up. Let's drop down to the 1 hour. And like I said, I'm on mobile. The internet is pretty slow, so it takes a while, even for TradingView. Although TradingView has been acting up this past week. I don't know if it's because I'm traveling, but yeah, it definitely takes a while to load here. And okay, so once we're done with these, we'll look over the ones that we took the first week of November, and we'll get to that in a minute. Okay, so there we go, finally loaded, and there we are. Okay, and then just just checking some of these. Okay, they're looking good. All right, we can start throwing some trading plans here with a long and short tool. Highly recommended. Yep. Oh, that looks okay. That level, but I think that's taken by the point of control. If the point of control line or the fibs are on a level, then I won't obviously draw back over them. But that looks like an important line right there. I should definitely draw. Yeah. I see another one that I might come back for, depending on, because it's kind of far away, but yeah, I might come back for it. And let's just draw it right now. Yeah, you can see that was a very significant level. Lots of touches all over the place. Okay, so that's all looking pretty good. Like I said, if the point of control or something else is on it, then I don't draw over it again. Let's go for the long and the short. Okay, so we will have added long and short trade plans for both of these, which are the new tickers for November. And like I said, we'll go on to review the previous plays from the first week of November, where I actually only added long positions to all of those. To Bank of America, Oxy, AT&T. I'm actually going to adjust those positions for this new week, and I'm also going to add the short bearish trade plans just in case. Because otherwise, if you just do a long or you just do a short plan, then if your ticket goes the other way, you can't really profit off of it. So you basically miss out on trade, and you don't want to be caught in the middle of the week trying to come up with a trade on the fly. Okay, so there's a long. Let's add our short. Remember, what you want to do is to add a long, you want to look for the next resistance, and that's your entry. And in this case, for the short, you want to look for the nearest support and make that your entry. Okay, and after the entry is defined, in this case for the short, you want to use the next support level as target, but you definitely want to adjust the stop loss as well. You got to make sure that your risk reward is above 1, in my case at least above 1.5. Otherwise I just don't consider it tradable. Let me adjust this. I got to zoom in because, like I said again, in my intro to trading video, I actually mentioned this. I say don't trade on mobile, but of course I'm traveling, so I don't have the option. Okay, so we're going to review the previous week's play, and this is Bank of America. Obviously you can see from this chart that it definitely worked out for us. It just basically headed north all the way and bounced off exactly right at our last price target there. Let me zoom out so we can just do a quick recap of a day-by-day play here, starting on Monday and all the way through Friday. So as you can clearly see, on Monday it didn't do much. Tuesday didn't do much either. And then Wednesday it just dipped red, and then when the CPI was announced Thursday and Friday, it just blew through everything. Entry point, well actually it was already above the entry point, but we reached our target. Okay, the other one was Oxy. This one didn't do quite well. We were bullish on oil, but oil actually retracted, whatever, pulled back, and that did not help Oxy. As you can see here, it just it did open here above. I mean, it did close above our entry. Actually, if we go to the 4 hour or to the 1 hour, I'm pretty sure there were, oh, let me zoom out here. There was some, we have some profit right there, and then it just sinks near the end. Oxy didn't do very well, as we can clearly see. That was pretty much it. From there, it just went down below our, or down to our entry level, and then from that point, actually right there, I think it closed below it, so that would have been our exit signal right there. And then the rest of the week, it just, it just tanked. And yeah, the price of oil obviously being the culprit here. And that was it. But we had a plan, we had a stop loss, and it worked. So okay, Pfizer healthcare. We were also bullish on healthcare as an industry, and it's going to load here quick. There we go. And it didn't do that well. this week. Man, this internet is killing me. I'm trying to load the day by day here so we can see what it, here it comes. There we go. Yep, you can see there. Let me zoom out here. Jeez. Okay, there we go. It was also hopefully bouncing off the bottom of that channel. It did bounce off the bottom of the channel, but you could see Monday, you know, red. Tuesday, a little bit green, didn't do much. Then Thursday was red. Friday was red. Actually, sorry, that's Monday right there. So Monday was red. Tuesday was a little bit green, and then Wednesday, Thursday were red. Didn't turn green even until Friday. Not even at Thursday when the CPI was announced, because it's not that kind of stock. It's not a growth stock. But it did bounce off the bottom of that channel, so there is a possibility for next week. You know, it could still play out next week. So let's go over here to, next one was AT&T. Yeah, this one was pretty good. I was really happy with this one. It blew through the target price and it wicked into that supply zone up ahead. We're going to use that in next week's trading as well, but you can see here that Thursday and Friday it just really took off. Kind of looks like a growth stock there, but no, these are all defensive, and we took them because we were expecting an overall bearish week actually, but CPI turned things around for us. Okay, so let's go ahead and actually fix these now. We're going to move our long trades up. Basically just move into the next support as our entry, and extend our price target level to anything above, you know, that that we either have drawn, or we're also going to go check to see if there are any other levels in between, you know, because yeah, there's probably a few we could draw, but basically that's what we do. We just move the long position up. If we had a down position, we would move the down position even lower, basically just using the levels as stepping stones, either on the way up or on the way down. So because we didn't have a bearish position for these plays, which was a mistake actually, for the first week of November, I'm going to add them right now. This is going to be my entry point right there, point of control line, and then use that next support level down as my price target. And that's basically what I'm going to go do with the other ones. Here hold on a second, this overlaps. Adjust the stop loss, like so. All right, okay. Make them a little bit nice and wide so we can find them later. These things get hidden when you move around time frames. Pfizer was the next one. There we go. And again, the plan here is to move our long position up and add the down position. So this was our original long position. So I'm going to adjust this like so, and no, it doesn't need much. I mean, I'm just looking for another level. Actually, that looks like a multiple touches right there. You can see it starts right there, but actually comes all the way back here. It was resistance back here, then support, then resistance, then support again, and it even extends a little bit farther back. Yep, I'll go ahead and keep this level, but this is definitely daily, so let me go ahead and switch this over to the 1 pixel line, just like so. All right, and I'm going to use that as that price target right there, 1.5. Okay, that's pretty good. All right, so there is the long position, and let's go ahead and add the short position so that we don't make that mistake twice. We don't want to be left without a trade. I'm going to use that point of control line, and just like that, adjust the price target, which is obviously not, and that definitely doesn't look acceptable. I got to adjust the stop loss here. overlapping down to this support, okay, and there we go. That's a lot better. Okay, so that would be our short position, or short trade plan, if you will. And hold on a second, let me just take this a little bit. Okay, bring this in. Don't want to make these too narrow because then you can't find them, like I said, when you move to bigger time frames. Or you can't find the handles if you move to smaller time frames. I'm going to adjust this. I'm a little bit, you see how the volume profile sets a level here near 51.41, but also down around, let me bring this down to like 49.70. So I'm kind of torn between those two. I'm going to use that volume profile level right there. See if I could find a support or swing level that I liked, and I might add it. I think I'm just going to stick with this. Oh, it does seem like, no. I'm going to stick with this volume profile as a level right there for the upside. Okay, and I can see a level right there. I like that one better. Okay, so I'll use that one. Yeah, that's pretty close. Okay, that'll be it'll give us a little bit better risk reward. Okay, so on Oxy, well, I don't know. We're gonna obviously keep both the long and the short, but the long I'm just gonna kind of move it over and to here, and I'll use. Let me fix this. Hold on a second. There we go. Let me get rid of this old one. All right, so I'll just keep that as the original play to the upside, and I'm going to go ahead and add the bearish down play here. This is the next support to the downside, so that's my entry. And see how I made my entry for the long position what it was? I left it at what it was because it basically closed below that support. So, okay, so there's the one for Oxy, and then finally for Bank of America, I'm going to go ahead and here we go. Oh yeah, this one was, okay, well that's pretty neat right there. That's pretty clear. 38.66 was our target. Now it's going to be our entry if it closes above. Otherwise, it will reject and head back down. Like so. Let me adjust this stop loss. I just thought of something. As I'm doing this, I'm thinking that because this went up, and I'm going to go ahead and keep adding these levels, but because Bank of America actually moved up, then if I don't adjust my bearish trade plan, it's going to be too far below. But I'll take a look at that when I get to it. Right now, I just want to find another level for Bank of America. Here we go. Trying to find one that I like. Right there. Okay. Okay, and that is going to be a good stop loss right there, somewhere in between those two candles from Thursday and Friday. Adjust that, and there we go. That price target is too high at 491, so I'll go ahead and adjust that later. Okay, that's going to be the upside. Now, the short position, I would start it here, which is the next support below, and that's going to take us to here as our price target, but we need to fix that stop loss because 120, 114, that's not going to cut it. Maybe 114, let me see. Yeah, let me look for a level back here. I got to find another level. So it's better to actually have to come back and find a level than to draw so many of them, because then you don't know which one to pick. So it's definitely better to add than to, okay, yeah, it looks like there's some nice reaction to this level right here, support to the left, and okay, we'll use that one. as our stop loss for the short position, and that will be our trade plan for both longs and shorts on the original tickers, as well as on the two new tickers that I added this week. So I hope this is helpful, and see you next time.